Hello everyone and welcome to today's Market Snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. Today we are seeing European equity markets trading in the red down around 1% at this moment in time. I don't think we can really read too much into these moves. It is a bit of a quieter trading day. Obviously the summer months do tend to bring that. We have seen decent gains in equity markets as of late, so I do think this is more a case of markets pairing gains as opposed to an increase in pessimism amongst the investors. We have seen a bit of a weaker data today, but I don't really think that's going to be feeding through too much into the markets today. One notable move in the markets is in the Australian dollar, though. That's down around 1.25% at the moment. That comes off the back of the minutes from the last RBA meeting, which were released overnight. And that showed that the central bank is a little bit more pessimistic about the outlook for the Australian economy. Talked about the cooling in the economy in the last few months. Talked about how the improvements in the labour market have moderated. And given the fact that this comes against the backdrop of a weaker inflation environment, people have seen this as a sign that this is feeding through into expectations for another rate cut in the coming months, potentially as early as August. So we have seen the Australian dollar pull down to around 0.75 against the US dollar at this stage off the back of those moves. We've had some data also this morning. We'll actually take a look at the economic calendar now. And there has been some data this morning from the UK, Germany and the Eurozone as well. We had the CPI data from the UK. Now this did beat expectations across the board. The core reading coming in at 1.4%, up from 1.2%. Problem here being that we can't really read too much into this data for two reasons. One, it was gathered before the UK referendum, and therefore it's a little bit outdated at this stage. A lot has obviously changed since the collection of this data, both in terms of the inflation outlook but the economic outlook as well. The economic outlook has deteriorated after the surprise vote for the UK to leave the EU, but also the inflation outlook's completely changed as well because of the depreciation we've seen in the pound and the expected depreciation that could follow. The inflation outlook has risen considerably from the 0.5% that we're at currently. With people suggesting we could see anything between 3 and 5% inflation in the next 6 to 12 months. So, of course, this changes everything from when the data was collected prior to June 23rd. It doesn't really have any impact on what the Bank of England will do next month. People are expecting the Bank of England to cut interest rates at the meeting this month in response to the expected deterioration in the economy, potentially expecting the Bank of England to overlook the near-term inflation risks in favour of supporting the domestic economy. This is now expected to come in August instead, once they've got access to more data to support the view that the economy is already starting to show some signs of deterioration. So again, this inflation data to an extent is quite insignificant, and I think that's why we haven't seen too much of an impact in the markets today. We are seeing the pound down around 0.75% against the dollar, but I don't think this is really driven in any large way by this inflation data today. I think the more significant data came from Germany and the Euro area, where the ZEW economic sentiment survey fell much more than expected. It was expected, the German number expected at 9.1 from 19.2, fell to minus 6.8. Clearly a significant hit in sentiment here as a result of the UK's vote on June 23rd. Of course, the move the vote itself does have negative implications for the Eurozone as well as just the UK. The Eurozone being obviously our largest trading partner. We buy a lot of goods from the Eurozone, so the depreciation in the pound could affect demand from the UK for Euro area goods. But it's also the contagion effect as well. The Eurozone economy is still extremely fragile. It's still in the early stages of recovery, and therefore the negative implications for the euro area as a result of the vote could be, from an economic perspective, could be significant. But then there's the risk of political contagion as well. We know that there's been an increase in support for anti-EU parties in the euro area. We've seen calls for a referendum in the Netherlands. We know there's support gaining in France, in Italy and Spain, and the fact that the UK voted to leave, I think these parties will be watching everything in the UK now very closely, because if they see the UK get anything resembling a good deal, then they are going to see this as a good enough reason for similar referendums in their countries as well. And I think this is hitting economic sentiment as well, the contagion effect, both economically and politically. Still to come in the US, we've got housing data, housing starts and building permits in a short while. We've also got API weekly crude oil stocks to come later on this evening as well. And one more thing to note is that it is corporate earnings season. We've got a number of companies reporting earnings today. We've already had some already this morning, and there's still plenty more to come, and this can also have an impact on sentiment as we run throughout the session. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.